I mean, that was very touching, right? And there could be more of him in similar situation, wanting to come back here for good, to be with the family, and still earn as much as what he could earn abroad. But again, guys, there is always a starting point. It's not always like the same or more than what you're currently receiving. There could be compromises. That's your pullback, right? That's your pullback. And the thing with US tax, again, based on experience, is that give it 2 or 3 years, you will regain what you have lost and maybe even more, right? Because that's your pullback. You'll need to pull back to be able to um, jump higher. And what's 2 or 3 years compared to the the benefits of you being able to get the freedom that you want, right? Yung iba nga, di ba? Kailangan nila mag-aral, right? To take masterals or doctorate just to climb up the corporate ladder. Um, but thing with Philippines, because it's a corporate setting, like you get promoted, how much do you get? 10, 20% of your pay. US tax though is enormous after 2 or 3 years. Depends din naman sa capacity nyo. Depends sa bandwidth, right? Depends on your skills. Um, you can easily double your income, triple your income, maybe quadruple your income when you're really, really good, right? Because you can have multiple clients. You can work for yourself, as a matter of fact. So earning is really unlimited because now you can reach out to more bookkeeping clients, convert your bookkeeping clients to tax clients, and maybe even focus with just tax clients, right? So convert your tax clients to tax strategies, maybe later on offer tax representation. And these are really lucrative practice, right? But you need guidance. And this is why Borderless community is here, because in you jumping for the great, there will be uncertainty, right? And we are going to be here to help you, you know, uh, I would say guide you navigate that uncertain path, right? And we may not have the answers for everything, but we will do our best, right? And that's also the importance of having a network, right? Because some people are actually practicing and they've been practicing for many, many years. They can show us the road, right? And give us the encouragement whenever we feel, disheartened or, you know, uh, discouraged. Right. So again, thank you. Thank you, Ella, for that. And again, it's very, very fitting that you share that with us today. Now let's move on to Detective. Jonah, are you ready? Are you ready for it?
Hi, I'm ready, Chris.
Hi, Jonah, nice to meet you.
Yeah, nice to
Um,
meet you
so
too, and the rest of the group. So,
go ahead.
yeah, so this is really very short, and I don't know if it's working for Mac because I'm using Windows. You can try Control Shift T. When I learned it, it's like like an aha moment for me. Like because I always accidentally close some tabs. And if you do that, you can the last tab you close will open. And if you try to keep on pressing that, those tabs that were closed will just open.
Let me
You
try
can
that.
try.
Control
You
Shift
can
T. Oh, nice.
Because sometimes when there are many tabs open, I unintentionally deleted some. That's our so yeah,
It's pretty
that's
awesome.
control.
Yeah, it works.
It
Control
it
Shift.
works with any browser. I think Firefox, Google, Microsoft Edge. I think it works.
You guys should try this. It's amazing. And I'm guilty of that. Sometimes instead of minimizing, I mistakenly would close the tab and then I have to
Yeah.
start over. Diba? Nakakainis. It loses my, I mean, I lose time in navigating to where I left off from the last tab I opened. So thank you very much, Jonah, for sharing this. This is very helpful for me, especially, na nagmo-multitask.
Yeah, and also to add, it's very helpful for mothers. Like you can check all the browser that your kids open.
Nag-audit.
Yeah, you can audit the browser that your children frequently open. That's
Nice.
all for my tech tip for today.
Thank you, Jonah. Pwede din to sa mag-jowa, no? Tapos,
Yeah.
yung jowa mo naki-open ng ano, tapos gusto mong curious ka kung anong inopen niya, baka Facebook niya. Charot.
Tapos baka mag-cause pa ng away, 'di ba? Ako may kasalanan. Sorry na.
Wag na lang, ano? But yeah, this is very helpful, Jonah. Thank you. Thank you so very much. So we had new people or fresh faces today. We had Maria earlier lead the prayer, and you, Jonah. Glad to meet you. And
Yeah.
Ella, I think I know Ella for quite some time already.
Yeah. Ay, Chris, I'll just share something because
Sure.
last night during the webinar, I jump out at 8 o'clock because I have a client meeting. And
Mm-hmm.
then when I opened the video, because he opened the video, so I turned on my video.
Mm-hmm.
And the background, I didn't chase. He's like,
Okay.
"Oh, what's your background?" Sabi ko, "Oh, it's from a webinar here in the
Ano ulit?
I'm
Really?
attending. So,
Grade 8?
free
Tunay
US
na
Biz."
po.
"Oh, that's great." Yeah, I just yes. And he say, "Oh, keep on learning."
Interesting. So he liked
Yeah.
your client likes that you're studying tax. Is he
Yeah.
a US client?
Yeah, he is a US client, a CPA with a small firm, but actually he onboarded a tax manager this month.
Oh no, nice.
Yeah.
So you're doing, I mean, what do you do for the firm?
I do bookkeeping for the clients. Like,
Mm,
yeah,
nice.
catching up for the books of new clients and then
Mhm.
maintaining the clients' books. But he
Interesting.
also have clients from Canada, so I do also bookkeeping for Canada.
Oh, nice. So he's bookkeeping and tax firm.
Yeah.
All right. And this could be very helpful for you. You could transition
Yes.
to becoming a tax preparer very, very soon.
Yeah, yeah.
How long have you been
Manifesting.
doing books, Jonah?
For him, it's 1 year.
1 year. But
Before,
overall,
I am a part-time contractor, and then he offered me a full-time, so I resigned from my job in government. Actually, just resign. Actually, I'm just on leave, but uh, this December I'm resigned. I just took a leave to have all the because government they pay the sick leave VL like 3 to 5 months. So I just took the leave so I have payroll every now and every month.
yeah, make the
Yeah.
most out of your leaves. Good,
Yeah.
good move.
Thank yeah. And
So
I can
you're
really
using.
relate when you share like a while ago. I can really
Mhm.
relate because there's really a fear jumping out to freelancing because we know that it's not really stable like employment. Even if you do bad, they do not fire you right there and then. So yeah, but when I felt like doing it, I told myself, why did I resign like this year only? I should have resigned earlier.
You should have resigned earlier. That's funny.
Yeah.
Yeah, I
Yeah, that's
mean,
all. I'm so talkative.
that's all right. Thank you, Jonah. The tech tip that you just shared is amazing. I think you were the one who suggested this to begin with,
Yeah,
right? Is
yeah.
it your
That's
boss that's
what
having
that's
this
our no, it's a different boss. It's a my client part-time that we have a tech tip every meeting.
another client that you have?
Tech tip
Nice.
and gratitude something.
Control Shift T. You guys should use that. Again, Jonah, thank you for sharing that. Very valuable. I am using that
Welcome.
like right now. It's very, very helpful. And I'm glad I
Thank
get to know you.
you.
Um, but yeah, that's really true. People are hesitant to leave their job, their secure job, for something unknown. And nabanggit ni Jonah about what if you get terminated by a client? And that happens a lot, right? Like
Yeah.
if you don't do a good job, you may get fired. Um, and you may be let go because the role is no longer, I would say, it's obsolete, right? There's no need for a bookkeeper anymore. But that's the thing with tax, right? With tax, you get better every year. Like every month, you get better. There's just so much that you can learn. And then once you learn them, it's only going to make you expensive, right? So I I rarely hear people from the tax firms getting let go, right? Unless they're really underperforming. But if you are performing, the client would not let you go because you're going to be very useful, right? Like you're going to be very helpful. And a tax firm would not want to let go of a or a member of the team because if there's going to be another one, there's going to be another set of training, right? And another familiarity with the taxpayer. And taxpayers themselves, they don't want new tax preparers every year, right? Because they will have to answer again the tax organizer, answer again the same questions, and they don't like that. Americans don't like that, right? So they like continuity, right? Whoever prepared my tax last year, I would want the same person to prepare my tax this year. So I don't have to send new set of documents, answer, the same questions. And then what are the odds that the new taxpayers may miss on very important documents because he's new? And that means, that could mean I'd be losing money because that could mean losing tax savings, right? So again, the trend for tax repairs will become valuable as we go over time. We become almost irreplaceable, right? Unlike bookkeeping, because in bookkeeping, everybody learns bookkeeping, right? There's just so many trainings in bookkeeping. But tax, there's not so many trainings in tax. Like look around, who else are offering US taxation? And I'm proud to say that we're the only one who conducts tax training on a daily basis, live, right? Some others you get to meet once a week, twice a week, right? And you do self-paced learning. And I'm not saying that I'm the best, but it's just different when you meet live on a daily basis. All right. So much for that. Now let's move on to, so we don't have a recap for the day. So again, instead of doing a recap, let's try to do Kahoots. So you guys, some of you may have not encountered Kahoots in your life yet, but that's okay. While the others who have been with us for several weeks, months already, you already know the drill, right? So I'm gonna send you guys a link in the chat box and let us answer few questions that are lifted or that were lifted from yesterday's session, right? So just bear with me. If you have a phone, it is going to be a lot better. So I would advise that if you're on your computer, you use your phone to join the game. Right? This is just for fun, guys. But pabilisan to ha. Kasi there's gonna be ranking. So the first one to get the correct answer first will get the highest point. Where is my Kahoots? Where is my library? Right, so post live day one quiz. Let's see. Let me just fix my settings. And then let's autoplay. So be sure to be quick because it's autoplay. That means the next question will automatically play. And I'm gonna send here in the chat box the pin code. So if you have a phone, use your phone to scan the QR code. Wait, where is my, I'm lost again. All right, there is my chat button. And again, it's gonna auto start. So be quick to join. So that's the code. I'll send you the link if you're using your browser to join. And then what you do is you key in the code. There it is. So that's the link, and then you key in the code. I can copy the code to 7315560. Okay, thank you, Jesu. Very quick. Have fun, guys. So it starts in 1413. So a lot of you are joining, 60 people. I think more are still joining. That's why the timer keeps resetting. So if we reach 100 already, I'll just click on start now. And then the others who are still joining, you can still join pa naman. Daming players, huh? I'll share my screen din pala. Right. 95 na. Wait, nagre-reset siya. After 100, I will click start now. The rest, you can still join, even if it's already starting. Pwede pa nga kayong humabol. Right. So for those who are seeing my screen right now, just scan this QR code on your phone and then type in this code if you want to use the link I sent in the chat. Right. So I guess we can start. Enjoy. And again, for the rest who would still make habol, you can. First answer is first in, first out. The oldest. Right. I don't know how you say your name. Is it Jason? Jassy. Which entity requires separate tax return? It's partnership. Matt is on the lead. You can also. Said is now in the lead. Mm, mm. Oh, I love the 32 people who says confident. I'd like to know you guys. Form 970 nandun yan sa Q&A natin yesterday. Matt is taking the lead again. Good job. 9 out of 13. What links bookkeeping tax filing? Agawan lang si Sed at si Matt. How do you change the live thumbnail? Kaya mo gawas kay live QBO gyapon. Can you export it and then change the thumbnail to the new one para hindi confusing?
Okay.
Right, good job. Matt on the first place said second. I don't know, said Joanne. I'm not sure if you're the Joanne that I know or that's in my head right now. Um, should be done. Why is it starting again? Right. Right. So, wait lang guys. Wait lang ako. All right. Sorry about that. How was that? How was the experience? Matt, congratulations, said. And then who's Joanne? Joanne, might be that tayong Joanne eh. Joanne Now Now and
So,
Joanne
ano po.
Delicious. Joanne Now Now. Galing mo, Joanne. Um, right. How was that, guys? From 4th to 22nd. You can change it before going live, Chris. What do you need, Jessel? Right. So may mga comments kayo. Sorry guys, hindi ko na mabasa. But wasn't that exciting? I think this is the benefit of you guys joining live. You can participate in the game live. May mga utang pa ako palang mga Gcash dun sa mga sininikyali sa aking mga names. Don't worry guys. Ano lang ako ng pondo. Charet. Hindi pa nagbabayad si Diskaya. Nakog kasi yung account niya. Na-freeze pala. Sorry. But I'll keep it to mind. Recorded naman. Right? Again, congratulations to those who uh, made it to the top 3. Sa mga hindi naman nag-top 3, okay lang yan. I think you would know your place after, right? After the game, you know how you place in the entire player list. So you can do better the next time. So it pays to play attention, and it also tests your a little bit of your retention. Not actually a little bit, but so much of your retention. By the way, before I proceed, let me just check with Kelly, Joan, or JR. I'm not sure we are live on YouTube. I'm a little concerned because if we are not live,
Live
then
daw po, sir.
there's not going to be a recording that will be made available right away. Oh, I think we are live. Let me just check.
Live daw po sa
Good.
JR.
Earlier kasi parang wala. But we want to make sure that we are live, okay? Para may instant recording for those who miss the live session. But again, guys, keep joining the live session so that you can get the chance to top the daily quiz. We're gonna do that every single day. Although I would want to make only about 10 questions para shorter lang siya. And then I was thinking we can also do a role play later on para mas ma-practice nyo yung actual client in practitioner scenario. Like yesterday, I mentioned about, and I highlighted the disregarded entity again because it happens a lot. So when you're in a call with a client, the client would not know whether they are a disregarded entity or whether they're an S corp, and it's important that you know that because when you engage with a client on a discovery call, it's important to ask those questions, right? So maybe one of these days we will do a what do you call that? A role play. Anyway, so Okay pa naman kayo. Di pa naman kayo na disheartened sa scores niyo. Charet. Again, don't take it seriously. Okay lang yan. May chance pa kayong bumawi. So yesterday we covered uh, several things actually. So sinong maka-remember a few words from yesterday, put that in the chat while I'm opening the course. Sagline. See, we talked about the types of business entities, right? So what are those? S corp, sorry, yeah, S corporations, partnership, disregarded entity, sole proprietorship, and limited liability corporation, correct? And we also talked about accounting method, and those are the accrual, cash, and we also even talked about hybrid. And then the accounting period, mainly the calendar and the fiscal. Right. So if it's April 15, is that a valid year end? Is April 15 a valid year end? What about last Friday in June? Is that a valid year end? Right. So April 15 or anything that's middle of the month or start of the month is not going to be a valid year end. But if you are doing a 52, 53 week return, uh, last Friday of the month would be okay. Right. So now we're gonna proceed with our study unit number 2. So let me just share my screen. I'll put my screen or my main screen on my first. I'll put the presentation on my first screen. I'll make sure that I share my sound. All right, you guys see my screen, correct? Right, so again, we're down 1 out of 20. So we're now heading to the second study lesson, income and farms. Again, if you're seeing that review button, only because I have finished this study materials when I took my enrolled agent examination. All right, so let's start with the introduction. You guys ready? I hope my internet is gonna cooperate. Why are you not playing? Come on. There you go.
The process for determining the gross income of a business is not all that dissimilar than that of an individual. There is, however, some special rules for those that derive business income from farming and fishing operations. By the end of this study unit, you will have a better understanding of how business transactions are included or excluded for tax purposes. We'll also see how self-employment income is determined and its related calculations. There's some specific percentages you'll want to pay extra attention to as they come up often. Finally, we'll see how farming and fishing income streams have some special rules, particularly when it comes to the timing and payment of their estimated taxes. Let's get into it.
All right, so for some of you who already taken the individual taxation course, this could be a little bit of a review for you because there is some repetition. Because we tackled about Schedule C, which is self-employment income, and Schedule E in the individual tax prep, right? So again, those are tackled here again.
You probably noticed in your Gleim knowledge transfer outline, the definition of gross income is really broad. Yeah, interestingly, that list is not even all inclusive. The tax code defines income to be broad and evolve with the world. So let's explore how income applies for a business. First, let's talk about gross income. Gross income includes all income for a trade or business. This means any revenue generated from your business activities is considered gross income. Cost of goods sold, or COGS, is essentially treated as a return of capital. A return of capital is not considered income for tax purposes. In other words, COGS represents the direct costs attributable to the production of goods sold by a business, and it is subtracted from gross income to determine gross profit. COGS should be determined in accordance with the method of accounting consistently used by that business. This means you should follow the same accounting principles and methods each year to ensure consistency and accuracy in financial reporting. State and local taxes imposed on a buyer, which are required to be collected and paid to the state or local governments by the seller, are not considered income. When a sale is completed, the amount of sales tax charged to the customer becomes a liability on the business. This means it's money owed to the government, not income for the business. Sales tax collected from customers is not part of your business income. Instead, it's a liability, and you need to pay that state or local tax to the state or local government. This distinction is important for accurate financial reporting and tax compliance.
By the way, guys, talking about sales tax, that's another line of practice that you may be interested in. Sales tax is not covered in the course. Okay, sales tax is different. It's usually gets involved with sellers in Amazon or Shopify. So the sellers, once they sell to a state, and that state would charge a sales tax. Not all states not all states charge sales taxes, but once a state does, then that should be part of the selling price, right? That should be part of what the customer pays in the invoice. In that, like what JT mentioned here, that will be treated as a separate line item, which is sales tax being treated as a liability because that will be remitted to the state government. And some would even collect at the county level. Again, depends on the state. And I really don't like state taxes because it's just too vast, right? It's too vast as compared to federal income taxes. And that's what we're studying, the federal income tax. We deal with the IRS. So when you say IRS, that's the federal. But when you say states, that involves states like California, Florida, Texas, and they have different sales tax rate. They have different ways of paying those sales tax liability. And it's a good practice as well, but it's just a lot, right? It's just a lot. So sales tax is like VAT, yeah, in the Philippines, pretty much work the same way.
Let's talk a bit about advance payments. For these, think gift cards. Generally, amounts received in advance for future services are required to be included in the year of receipt. However, if you're an accrual basis taxpayer, you can elect to defer recognition of this income until the time of performance, but no later than the year after the payment date. Gross income also includes the discharge or cancellation of indebtedness when a debt is canceled in whole or part for consideration. If a debtor performs services to satisfy a debt, the debtor must recognize the amount of the debt as income. However, if the payment would have been a deduction, income is not recognized from a canceled debt. But if a creditor graciously cancels a debt, the amount forgiven is treated as a gift and not as income. This
Right. This is something that you should also learn. Anything that is reported on a 1099-C, that's a cancellation of debt. So example of that would be a cancellation of debt from a credit card. And it happens. I've encountered this, and that should be reported as other income.
This is an important distinction because gifts are not included in gross income. Taxpayers may need to reduce tax attributes, including NOLs and credits. Alternatively, the depreciable basis of tax attributes include
regarding NOLs or net operating losses, as well as credits. This is very important, especially for big clients where there are operating losses that were disallowed in a given year. That has to be included in the current year. It has to be carried forward. And that is why not a lot of big taxpayers would want to switch from one preparer to another, because this could be impacted, the NOLs and the credits. They may lose it, especially if they happen to be working with, a not so competent tax preparer. They may lose the NOLs and the credits if they miss it in 1 year. So, and usually if you have NOLs and credits, it's easy to work on if that's an existing client, because from one software to another, let's say, or from one tax year to another, for example, you're using Lacert as a tax software. So what you usually do, if let's say 2024 is already done, that's already filed, and the 2025 is already started, then what typically happens is we just roll over the tax return from 2024 to 2025. So everything gets copied. The personal information, the carryovers, the NOLs gets carried forward to the next tax year in the same tax software. Right? There are instances as well wherein a firm switches from one tax software to another. For example, from UltraTax, another tax software, into CCH, another tax software. So if there is a transition and there is no mechanism for a switch, like a direct switch, wherein the files get migrated from one software to another, then you have to manually input the NOLs and credits. And again, be very careful because you may be missing on those.
NOLs and credits. Alternatively, the depreciable basis of an asset may be reduced. This is done on Form 982. The debt cancellation is reported to the taxpayer on Form 1099-C. Note, if the taxpayer is in bankruptcy or is insolvent, meaning the fair market value of all assets is less than the liabilities immediately prior to forgiveness, some or all of the discharge may be excluded from income. As a catch-all, we've got this category of other you'll see in your GLIME knowledge transfer outline. I've listed a few here, but I tell my students to consider the theme of these items rather than try to memorize an exhaustive list. When a transaction comes up, we should ask, is the taxpayer economically better off after the transaction than before? This is fairly straightforward for most of these, except for the tax benefit rule. So let's talk through that one. Let's say a taxpayer had a deduction on a prior year return for an expense that was later refunded. In that prior year, the taxpayer deducted the expense on their income and paid less tax. They were economically better off in that year because of the reduced tax liability. However, in a subsequent year, the expense was refunded, basically meaning the taxpayer took an expense that should not have been taken. I'm not sure. We could fix this with an amended return, but that seems like a ton of paperwork. Instead, the tax benefit rule allows us to true up the issue in the current year and include the refunded amount in taxable income to the extent of tax benefit from the prior year. There are specific tax rules extent of
Right.
tax.
So amongst this taxable, other taxable income, the ones that is common, I have not seen this in my 5 years or 6 years in tax practice, but tax benefit rule, what usually applies here is state tax refunds. So state tax refunds are, if I'm not mistaken, it's on a 1099-G, right? And you should also know that US tax forms are usually using 1099. So 1099 NEC, 1099 MISC, 1099 NEC. You'll get familiar with those as we go along, but it's usually, again, preceded by the numbers 1099. And they don't read 1099 or, I don't know, but there is a way that you say it the way practitioners do. So form 1099 is said form 1099. Form 1040 is called 1040. So if it's 4 digits, it's said the first 2 digits and then the last 2 digits, right? So 1065, 1120S, 1120, to form 2555. So you should be familiar with how you say the form, because in that way, someone you're talking to would know that you're familiar with tax forms. Let's say, for example, you're in an interview and you would say, I'm familiar with the form 1040. I'm familiar with the form 1065. I would immediately know you are not a tax practitioner, right? So again, be very familiar with how you say the forms. So going back, a tax benefit rule, again, this is applicable for state tax refunds. And if the taxpayer happens to use the itemized deduction from the previous year, then whatever state taxes that was paid was used in reducing the federal taxable income. So in the following year, if the taxpayer received a state tax refund, you know what? The state tax refund becomes a taxable income at the federal level. Because again, that refund actually benefited the taxpayer in the previous year. Okay. However, if the taxpayer did a standard deduction in the prior year, and in the current year they received a state tax refund, that state tax refund is non-taxable. It's not a taxable income. Again, the premise for that is a tax benefit rule. Wala nang nakuhang benefit sa taxpayer last year from that state taxes because ginamit niya is the standard deduction. And for those who have not been familiar or who have not been made familiar with standard deduction, itemized deduction, maybe that's foreign to you right now, that's something that we've already discussed in the individual taxation. So if you guys would want to know more about that, I would say go back to the individual taxation course in YouTube, or just look it up online. Use Perplexity to differentiate between a standard deduction and itemized deduction, because it's we're not going to discuss that in length here, okay? Because that's applicable for personal tax return. And we're talking business now.
Benefit from the prior year. There are specific tax rules regarding the assignment of income. Taxpayers may not arbitrarily assign income to a different taxpayer. So let's say our taxpayer has an apartment building that generates rental income. The taxpayer could not assign the rental income to their kids unless the asset, the apartment building, was actually in the name of the kids. The same concept would apply with services like a paycheck. The taxpayer actually earning the paycheck has to report that income. Amounts received or accrued as rent must be included in gross income. Rental income is any payment received for the use or occupation of property. Cash basis taxpayers report rental income in the year it is received, regardless of when it is earned. Accrual method taxpayers generally report income when it is earned rather than it was received. Now, however, for both accrual method and cash basis taxpayers, prepaid rent is considered income when received. Payment by a lessee of expenses of a lessor is generally considered additional rental income to the lessor. This can happen, for example, when a tenant pays for an emergency repair like a water leak. However, capital improvements made by a lessee are not income unless they are made in lieu of paying rent or in exchange for a reduction in rent. This could be, for example, painting. In such cases, the income is taxed when the property is sold. Consideration received by a lessor for the cancellation of a lease is treated as substitution for rental payments and not a return of capital. This means it is included in rental income. Rent does not necessarily have to be cash. Property or services received as rent in lieu of cash may be included in rental income at fair market value. Similarly, security deposits used as final payments of rent are considered advance rent and are included in income when received. A security deposit is not included in income when received if the lessor plans to return it to the tenant at the end of the lease. However, any part of a security deposit kept during any year because the tenant did not live up to the terms of the lease is included in income for that year. A lease with an option to buy is a rental agreement that gives the tenant the right to buy the rental property. Payments received under such an agreement are generally considered rental income. So how do we report this? An individual lessor generally reports rental real estate income and their expenses under Schedule E of Form 1040. However, if the taxpayer provides significant services to the real property lessee, they should use Schedule C of Form 1040. A corporate lessor, which is a non-pass-through entity, generally reports rental real estate income and expenses on Form 1120.
Right. So these are very important things to know. Where to report rental income and why do we study about rental income? This is very common, right? Very common among taxpayers because in the US, it's quick to get a second home, right? And Airbnb is also pretty common. So a lot of taxpayers have rental income. And where do you report the income depends on the circumstances. So Schedule E, if it's passive, that means usually it's long-term rental. So if it's a second house of the taxpayer, that's usually a passive income. That means, if they're renting it on a long-term basis, meaning on a yearly contract, that would be on Schedule E because it's passive. It's important that you know the difference between passive and active income. So passive, if there is a passive income and there's passive loss, they only offset each other, right? Schedule C is when the rental is, say, for example, Airbnb, and it's actively managed by the taxpayer, meaning there's a significant number of hours. There's a specific requirement from the IRS, research along how many hours should be rendered by the taxpayer in the rental property for that taxpayer to be considered as actively managing the property. So if it's actively managing the property, then it's an active income and it goes to Schedule C. Why is it important? Because Schedule C as an active income offsets Schedule C being an active income, if it generates losses, it offsets active income. So active income would include wages, right? So in matters of tax strategy, you would want rental property to be in a Schedule C, especially if you are a high income earner individual. So if you have a high wage, for example, and you have a rental property, you would want to be classified as a Schedule C filer for your rental property because you can generate paper losses from your rental property by way of depreciation, right? So it's not necessarily a loss, but because you're depreciating the property that you're renting, it can show as a loss, and that loss will help offset the active income, which is in the case of a high income individual, is it's a W-2, right? So a high W-2 can get offset by a paper loss on a rental property. But if it's in a Schedule E, if you have a loss here, it will not be, it may not, there is a limitation as to how much you can offset from a passive rental property. We'll tackle that, I think, in chapter 3, right? There is a limitation. And some others, they don't even get benefit from the passive loss. So only with you have passive income. What are passive income? Those are like dividends, interest, usually capital, interest and dividends, and other rental income, right? So passive income gets offset with passive losses. Active income gets offset with active losses. So that's what you need to know, the difference between reporting it in Schedule E versus reporting it in Schedule C. And then 1120, if what he said was if the building or the property is owned by a corporate entity, then that will have to be reported in an 1120S. In some cases also, partnerships and corporations and S corporations are formed to manage a rental property. In that case, those will have to be reported in the Form 1120S or Form 1065. Okay.
40. A corporate lessor, which is a non-pass-through entity, generally reports rental real estate income and expenses on Form 1120. Lastly, let's talk about bonds. And no, not the secret agent. Bonds are debt instruments that pay interest. When a bond is issued at a premium, it means the bond is sold for more than its face value. So say, for example, if a bond has a face value of $1,000 but is sold for $1,050, it's issued at a premium. This usually happens because the bond's interest rate, or coupon rate, is higher than the current market interest rates. Investors are willing to pay more for the bond because it offers better returns compared to new bonds being issued at potentially lower rates. When this happens, the additional amount received above the face value is recognized as income, but is recognized in smaller pieces over the life of the bond. Well, that's gross income. Thanks.
Right. In this case, income from bonds, you don't really have to worry so much about this because it's going to be enough. This is going to be reflected in a Form 1099, right? And you will, just enter it the way it appears in the actual form into the tax software. So this is a no-brainer.
Thanks for watching. Gross income from a hobby activity of an individual is, all right, is it not?
Right. So to test your understanding, gross income from a hobby activity of an individual is A, not reported if less than $400. B, reported as other income on Form 1040. C, reported as gross income on Schedule C or Form 1040. Or D, netted against related expenses and the excess if any is reported as other income on Form 1040.
$400. Does that seem like there would be some sort of special provision that would allow you to keep your hobbies under $400? Or should the concept of total gross income kicked in and all income is taxable? Yeah, it's actually the latter. So it's not A. And if it seems like there's some sort of special de minimis carve out there being excluded from tax, there probably isn't. Okay, B, reported as other income on Form 1040. Well, I'm not necessarily in the business of trying to generate a profit. I'm not self-employed. It just happens to be a hobby of mine that I made a few extra bucks on it. Not really profit motivated, which if it's not profit motivated, that takes out option C, because if it's profit motivated, we're in a business. That's a Schedule C. That gets subject to self-employment taxes. So far, B's looking pretty good. D, netted against related expenses, and the excess, if any, is reported as other income on Form 1040. So do we get to net related expenses and excess, if any, is reported as other income? Well, what if it ends up being a loss? The correct answer on this is going to end up being B. That's the one that we want to have. And we're not expected to make a profit. It's going to show up on Schedule 1. Related expenses are not deductible. So those are going to be excluded. B is our answer, reported as other income on Form 1040. In year 1, Ms. Azalea had gross income of $110,000, a bad debt deduction of $12,000, and other allowable deductions of $75,000 on her Schedule C Form 1040. She uses the accrual method of accounting and the specific charge-off method for bad debts. During year 2, she recovered $8,000 of the debt that she had deducted in year 1. How must Ms. Azalea report the recovery of the bad debt?
Okay, make your guess, guys. So in year 1, Miss Azalea had gross income of $110,000, a bad debt deduction of $12,000, and other allowable deductions of $75,000 on her Schedule C. She uses the accrual method of accounting and the specific charge-off methods of bad debts. During year 2, she recovered $8,000 of the bad debt that she deducted in year 1. How much Miss Azalea reported the recovery of the bad debt?
Okay, can she A, reduce her bad debt deduction for year 2 by $8,000? Well, what if she doesn't have any bad debt deduction for year 2? B, she must include $8,000 in, quote, other income on her Schedule C for year 2. And that kind of makes sense, right? Because she recovered the $8,000, her debtors finally paid her, so that one is not so bad. Okay. C, she must include $8,000 in non-business other income on her Form 1040 for year 2. Well, she's still in the business. It's not non-business for her. This should still be subject to income and self-employment taxes. So far, B's looking pretty good. D, she must file an amended income tax return for year 1, but she didn't receive the money until year 2. She didn't know about that money until year 2. So even from an accrual accounting perspective, she would not have counted it as income until year 2. So for me, the best answer here is B, that she is going to include it on her other income for year 2 for Schedule C so that it is subject to self-employment taxes as well as income tax. That is the correct treatment under Section 111 of the tax code as well. So answer is B.
Okay, guys, I think that's an application of the benefit rule, right? So the taxpayer got the benefit from last year, so it should be considered as an income on the following year. Same principle as the state tax refund.
Self-employment income happens when a taxpayer works for themselves as opposed to an employer. Let's check out how this impacts taxes. So, what's included in self-employment income? Well, pretty much everything that the taxpayer earns, but not through an employer. This could be a trade or business, but wouldn't include income streams like interest, where the taxpayer is not earning the income. All right, so what's excluded? Net earnings from self-employment wouldn't include.
Right. So common Schedule C income is trade or business, and this is usually supported by a 1099 NEC, right? 1099 NEC stands for non-employment compensation. So if you are not an employee of the company that you're working for, you don't get a W-2. Instead, you get a 1099 NEC. And this also has to be, I mean, you've got to be familiar with this, because if you are maintaining the books of a client who, I mean, you're working for as a bookkeeper, and you see that you're categorizing transactions under contractors, and if that contractor has received payment from your client of $600 or more, your client has to issue a 1099 NEC to that contractor, right? If that contractor has a social security number. If we are working as a contractor for a client in the US, we are technically our contractors, but we do not get a 1099 NEC. Why is that? Because we don't have a social security number. So what we fill out is a form W8BEN. We provide our tax identification number in the Philippines because we are foreign contractors. Make sense? If it's a partnership, the tax document for this is a 1099, is a K1. So there is a K1 statement issued in a form 1065 that is issued to the taxpayer, and that will go into, that income will be subjected to self-employment income. Director fees, payments of lost earnings. I have not come across these, but there will be communication that will be provided to you by the client, usually in the form of a tax organizer. So the tax organizer, the client will fill that out ideally every year to tell you where the income come from, right? What is the source of the income?
Income streams like interest, where the taxpayer is not earning the income. All right, so what's excluded? Net earnings from self-employment do not include several types of income. First, they do not include salaries, fees, and other income subject to Social Security or Medicare tax that was received from performing services as an employee. Rent from real estate and personal property leases with real estate is not included unless you provide services to the tenants. Services are generally considered provided for the occupants if they are primarily for their convenience and not services normally provided with the rental of rooms for occupancy only. This is detailed in publication 334. Dividends on shares of stock and interest from any bond, debenture, note, certificate, or other indebtedness issued with interest coupons or in registered form by a corporation are not included unless they are received by a dealer in stocks or securities in the ordinary course of their business. Similarly, an S corporation shareholder's distributive share of income or loss is not included in net earnings from self-employment. Income received as a retired partner under a written partnership plan that provides for lifelong periodic retirement payments is not included, assuming you have no other interest in the partnership and did not perform services during the year. The sale, exchange, involuntary conversion, such as gains resulting from casualty or theft losses, or other disposition of property is not included unless the property is stock in the business or property that is considered inventory primarily held for sale to customers in the ordinary course of business. And finally, kind of an odd one, fees received for services performed as a notary public.
Something is off with my connection, guys. Just bear with me 1 second. Let me pause this for a second. And while it loads, I'll just open ProConnect. because I would show you the form 10 Schedule C on the form 1040. You may be wondering um why we're talking about 1040 when we're in the business section. Only because both Schedule C and Schedule E, which we will talk about tomorrow, are business income, right? So they should be covered in this course. So just bear with me while I open my ProConnect. So for those who have no access to ProConnect yet and has not created an account, you can refer to our shared file under notes and resources. Kelly has already made the link available to the tutorial on how you can create an Intuit ProConnect account. For the Drake, I'm still waiting for a volunteer to initiate a recording via Loom, ideally, and paste that in our shared file. I can't do it because I'm using a Mac, and the Windows computer that I have is a work computer that I cannot download any unrelated software. So just so you have an idea how a Schedule C looks like. So that Schedule C is an attachment in the Form 1040. Form 1040 is the individual tax return. So as you can see here, there's income section in this tax software. So income are listed, various income are listed as wages and salaries. These are for W-2, interest income, dividends, everything here are all income. And then you see here Schedule C and then Schedule E, right? These are the ones that we're going to be talking about in this module. So business income, Schedule C, rental income and royalty are in Schedule E. So particularly Schedule C, everything is going to be listed in here in income statement format. So first section is your business information, and then your income statement. So in the income statement, this is where you input all the gross receipts coming from the profit and loss statement, right? And then the cost of goods sold, and then the related expenses, right? And then how that shows up in the actual return. So just go to check return, and then on the form, you can view that we don't have an income yet in Schedule C. So let's put some entries here. So for example, we have a consultancy services. And then let's just let that code sit there. And let's just skip all the other information. We can say we are using cash method. We don't need inventory because this is a consultancy services. You see here, this questionnaire, if required to file 1099, did you or will you file all required forms? So usually 1099s are again for contractors, right? So if you are preparing for a tax return for a bookkeeping client who you know actually issued a 1099 at the end of the year, then this has to be answered as a yes, okay? If there was no 1099 issued, then it should be a no. And then let's fill out just the income statement. Let's say you made 100,000 for the year. Then let's stop there. So then our Schedule C will now come up here. See, Schedule C, consultancy services, and on the actual form that is shown like this. So when you're working with a tax software, and you should be aware by now that in the US, they are using several tax software. There are so many. One of that is ProConnect, Drake, CCH, Lessert, UltraTax. There's plenty, guys. In this lesson, though, we're going to cover only ProConnect and Drake, because those are the ones that are readily accessible. The rest are for a fee. So in the tax software, you usually have an input section in a form view section, right? So you will, the one thing you need to learn when you're when it's your first time to handle US tax preparation, is aside from learning the concepts, you need to learn the software navigation as well. It's very important. You cannot probably get hired by a tax firm if you have no experience using a tax software. Okay. And once you learn one tax software, the navigation of it, the inputs, and generating the forms, it's pretty much easy for you to learn other tax software. They work pretty much the same. So this is a Schedule C in a form view, and this gets attached in the Form 1040. So see, this actually pretty much looks like an income statement, right? And then Schedule E, we don't have a Schedule E in here. We'll cover that tomorrow. So this is your income, and if you're a bookkeeper, you can actually, use your client's books to pro forma a Schedule C return or a 1040 return with a Schedule C. And if you want to know more about this, there are exercises that we have with a Schedule C in the individual tax return course. All right. So again, that's Schedule C.
Are also not included in net and considered inventory primarily held for sale to customers in the ordinary course of business. And finally, kind of an odd one, fees received for services performed as a notary public are also not included in net earnings from self-employment. So here's the formula.
So why are these excluded? Employee income, which is in the W-2, rental income, because these are reported elsewhere, okay? Sorry, was I showing my entire screen to you guys or just the line?
The line only, Chris.
Oh my God, I'm so sorry. Why didn't you guys not tell me? I showed you guys ProConnect earlier. I was supposed to share with you guys ProConnect earlier.
Yeah, we saw the ProConnect.
Oh, you saw the ProConnect?
Yes.
Okay,
right now,
all right.
the Gleim is showing.
Okay. So I thought I only shared the line. So if I'm going to minimize this, again, just for emphasis, if I go back to input return and then view all screens. So you see Schedule C, right? And then all the income that were listed here, the employer income, which is a W-2, rental income, dividends, those are reported elsewhere, okay? So they are not part of the self-employment income. They're reported elsewhere. Make sense? And then when you open up your 1040 return, again, which is the individual tax return, how that shows up on the face of the return is here. So you have your income listed in here from various sources, right? So W-2 income, interest, dividends, retirement income, your social security income or benefit, and then your capital gains, and then that additional income from Schedule 1, line 10, right? So all the other income is going to be listed under Schedule 1. So Schedule 1 would be listed in here. So Schedule 1 includes your business income, your rental income, and all other income, right? So it becomes a part of a schedule, right? Because 1040 essentially are only 2 pages. That is just your 1040. If you will put all the income types here, this is going to extend, right? This is going to extend. And right now, if I delete, so you see 1040, you have Schedule 1 and Schedule 2 and then Schedule C, right? If I delete Schedule C in here, if I delete this, if I delete this, right? Notice what happens to my form. So Schedule C is gone. The related schedules are also gone. So that's how it works in the tax software. Only the applicable schedules are automatically attached, right? And generated in the tax software. Because in this case, we have no income. We don't have any Schedule C just yet. We only have the basic Form 1040, again, which are 2 pages. So if your client only has a W-2 income, it's going to show up like this only. There's not going to be too many attachments. So the more complex the return that you're preparing, the more attachments will appear in here. Okay, when you print the return, there's going to be multiple pages. And so you don't have to worry about, thinking about what schedules to attach, because again, it's going to be automatic. The system will identify that schedule for you. It's really just a matter of you knowing where to input. And that's the beauty of US tax. It's not too complicated, guys. Mas complicated pa yung BIR natin, telling you. Nagiging complicated lang din naman ang US tax kung complicated din yung case ng taxpayer. Right? So, and if you're starting as a new tax preparer, hindi naman kayo ipapahawakin ng client niyo ng complex na tax return. So usually very simple tax return lang din yung i-assign sa inyo. So again, the point there is that
self-employment
income that are excluded
so here's
are
the
reported elsewhere. Okay.
Formula for self-employment tax. This component here is everything we discussed previously, net income from self-employment. And there is
something is wrong with my connection. Why is it this low? Give me 1 second.
Is a throttle that's applied, which
just bear with me 1 second. That's what I don't like about Windows computer. Just clear some stuff. You guys have any questions so far? Are we good? So by now, the way we conduct our course is we transition from the why and the how every now and then. So again, you get to know how these things relate to an actual tax form. Para hindi kayo dumbfounded ng too much information without actually seeing how it works. Kasi tendency is, nakakalimutan nyo din naman yung theory, right? And the theories, there's so many theories that you need to learn, but that you will have to learn, but you don't need to learn everything at once.
Excludes 7.65% of net income. But I'll show you a shortcut. Simply multiply by 0.9235, and you'll get the same exact result. Self-employment tax is really FICA, which stands for the Federal Insurance Contribution Act, and it has 2 components. Social Security tax at 6.2%, and then Medicare tax at 1.45%. Those 2 combined are FICA. Now, you've probably noticed that this adds up to 7.65%, but your Gleim Knowledge Transfer Outline says 15.3%. Well, the reason why is because FICA taxes are paid twice, once by the employer and then once by the employee.
Well, that's loading. Self-employment tax is charged 15.3% self-employment tax. And that actually is equivalent to the FICA taxes in the W-2, right? So if you're employed, you pay the government Social Security taxes and Medicare. So a half of that is paid by yourself, and half of that is paid by your employer. The same way in the Philippines, our Social Security is half between our employer and us. PhilHealth and Pag-ibig, that pretty much the same works the same way. But if you're self-employed, you are your own employer, right? You are your own employer. So your self-employment income is subject to 15.3% because you are the employee and you are the employer at the same time. You get what I'm saying? So that's where the 15.3% self-employment tax is coming from.
A self-employed taxpayer is
I'm really not sure why my connection is
both employer and employee, so they are liable for both 7.65% twice, hence 15.3%. There is a deduction allowed for the employer portion. The Social Security tax component has an income cap which adjusts for inflation each year, though the rate remains the same. Once self-employment income exceeds this cap, the Social Security tax is no longer applicable. However, the Medicare tax component always applies. There is an additional Medicare tax, which is 0.9%, and that applies to all taxpayers, both employed and self-employed. We should
right. While that's loading, in case you guys would wonder, just me, are you gonna memorize everything? The 9.32, the 0.9325, the 15.3% and everything? No, you don't, right? It's just a good to know thing. Again, the why behind the how. Because the tax software will do its wonders. It's gonna do the computation for you. Okay. And even if you're going to take the enrolled agent exam, you're not going to be asked to do computations that much. Very, very few, right? You're not even going to be asked the rate as well, because the rate, they are changing based on the inflation. So very seldom that you are asked in the actual enrolled agent exam a computation and the rate, except the credits part. The credits part, there's a lot of computation there, but everything else, they're very situational. They're, a matter of applying the principles, right? So don't worry about, getting overwhelmed with these numbers. It's just really good to know. Okay? If you're a taxpayer, you don't need to remember these things.
acknowledge that here as well. While it is technically not self-employment tax, it does still apply.
Naawa ako kay JP kasi napuputol-putol siya. Pagod siya. Kaka-open ng kanyang mouth. I don't know. Kaya pala, nagsuslow down yung internet kasi nag-upload si Zera ng malalaking files ngayon. Dito kasi siya sa condo. Bear with me lang guys ha. I-allow lang natin itong mag-load. For the meantime, may mga questions kayo? How do you find the course so far? May na-overwhelm na ba? May na-feel ba na too much information? Yung iba hindi pa nakaka-relate. Okay lang yan. Again, in this kind of work that we do, persistency is the key, right? Kasi hindi naman lahat yan magsisink in agad-agad eh. So, yan yung magsink in 5%, 10%, and then balikan na lang after. And again, when you're actually doing the tax return, later on you will realize that, yeah, it makes sense that you understand the theory and the principles behind it, because then it enables you to review your own work, right? Kasi sa tax, pwede ka naman mag-prepare ng tax by just watching Loom videos, right? Like entering, numbers into the tax software, knowing where to go, how to go about it, And that's how I used to train, few of the people that I worked with in the past. I will just record a Loom video showing them how to enter a profit and loss in the tax software, setting up the work paper. So they know the how, right? They know the how. They don't need to necessarily know the why, because I will be reviewing the return anyways. I just need them to input, right? The data entry portion is taken care of. So I only need to spend little amount of time to do the review. But if you want to be someone who's going to be working as a tax preparer in a tax firm, you want to understand your work, right? You want to be able to review your own work. You understand why things are entered the way they are. Why do the forms get those attachments? What those attachments are for? If you're looking for a certain number, you know where to go, right? That's the importance of knowing the why, right? And we are also in a very unique situation where we want to get into US tax prep, but we don't have any experience. So will we get hired by a tax firm if we don't have an experience? And if you only have training, right? Maybe not, right? Maybe not. That's why we have here boardless accountants, because our goal is not only to train you, but also to really get you to practice, right? And that practice is through the internship, or that practice is, in fact, even through the training that we have, because we will have exercises later on, and you will have familiarity with the tax form so that you can make your own exercises, enter them into the tax software, so that even if you don't have an experience, you will have the confidence to go after an interview. And in that interview, you can tell your prospect employer that, hey, I may not have an experience, but if you can give me a try, give me 15 minutes of your time, I can show you how I prepare a tax return. And you will have an advantage hiring me over someone who has the experience, because I will come at a very affordable rate, right? And I'm very hungry because I need this experience, and it will work to your advantage, not only in terms of cost, but in terms of my diligence and my persistence, because I want to learn, right? So that's how you will approach an interview, because you would want someone to also give you the chance. And mind you, a lot of Americans are very, very good people, right? If they see that you're hungry, if they see that you're very willing to learn, and that you have invested in really good training, and that you can really do the job, they may give you the shot, right? They may give you the shot. And that's how I also learned. When I got into the job, I had zero tax experience. What I only had was my CPA license, just that, and my interview skills, right? But I learned on the fly, right? I learned while I was doing the job, and I was given a lot of benefit of the doubt, right? So when the reviewer was reviewing my return, I was given so much, leeway, because I didn't know tax returns. So the expectation was very low. It was just data entry, right? And I also had to work my way up. You know what I mean? I had to learn from various resources. And you're lucky, because we have this course already at Boardless Accountants, where someone who's experienced are showing you the way, both the how and the why, right? So if I got into US tax with no experience, no training at all, then you have a better chance compared to I had back in 5 years ago. You get what I'm saying? So a lot of clients will gamble with you, right? If you have, if you can only demonstrate confidence during an interview, right? And some of you, right? Because again, this will lead to internship certification that could really help you penetrate the US tax market. And it's only just a matter of experience. Give it 1 year or 2 years, guys. Again, if you're really good and you're really hungry and you don't stop learning, you will get so far, right? You will get so far in tax. And it only took me less than a year, actually, to grow immensely in tax because I was very hungry, and you can tell I was very hungry for learning, and I had so much time to spare. Um, and ever since, I have experienced immense freedom, right? And that's what I also would want to experience to you. And if I grew back then when there was not much resource, you are in a much better position than I was 5 years ago. Right. So I think JT is still loading. Let's just finish this and we'll continue tomorrow. We need to finish early because I have a meeting with Kendall at 9. So hopefully by tomorrow, the internet's not gonna be that slow. Only now the timing kasi si Zara nag-upload din. So I'll ask her later on to reschedule her uploads, not during this time. Okay. Sorry about that. And JB says, I feel like reviewing the individual tax concepts and previous terms encountered in earlier sessions. Yes, this is essentially a review for those who already took the individual taxation course, specifically again on the Schedule C and Schedule E.
But only once income is over $200,000. Note in your GLIME knowledge transfer outline, there are a few.
Right, it really is frustrating, guys. Nawa ako kay JT. Hindi niya matapos-tapos yung gusto niyang sabihin. But let's see where we are at the moment. So for this study unit, we're only going to be tackling gross income, self-employment, and then farming and expense. Let's slide through farming and income and expense because this is also very rare. So let's continue with this course tomorrow. Kasi 8:15 na din. So for those again who have taken the individual tax course, this would be a sort of a review already because we've covered this rental income, which is in Schedule E. We've discussed the principle, the basic concepts. Business expense also is kind of a review. So this is where we talk about meals, what are deductible expenses and what are not. And then other deductions, this would also be sort of a review. This one is new. Basis and property transactions is new. Depreciation, we've kind of tackled this as well. Remember Form 4562? This is sort of a review already, but there will be new concepts related to business. Credits, losses, and additional taxes. Some of these we have already tackled in the individual section, but some are new. And then all the way from section number 9 to exempt organizations are going to be completely new, right? Because now we're going to be talking about the Form 1065, which is the partnership, and then 1120, which is corporations, and then S Corp, which is the 1120S, right? So the first few meetings will be a review. And if you feel like, you would still need to attend, yes, you have to attend just to reinforce what you have learned. Maganda yung, tuloy-tuloy yung inyong learning. And even if you feel like you already know solid ka na in this, I still encourage you to join up and all the way to session number 8. Okay. Cherry, you have a question?
Hi, Chris. I think the lesson is just 4 minutes left. Do you want me to share my GLIME instead so that we can finish it?
Wait lang. Magna-9 na kasi. Do you want to continue in the Zoom with the folks? Because I have to go. I have a meeting at 9, and I'm gonna be using this computer for the meeting. Cherry guys and Shawnee, they have a GLIME access because Shawnee purchased that from I think last year. So I think she has good connection. So if you guys still have the time, recorded naman to. So Kelly is here as well. If you guys can work together, Cherry can show you the rest of the income and farms material, including the activities or the questions in between. so that by tomorrow we can start. We can start with rental property and laws and limitations. Is that okay, guys? For you guys who would want to stay, just to finish income and
It's just 4 minutes left, I think, of the video you showed earlier.
yeah. Or yeah, I think yeah, we can end at 9 and then Cherry, you can share your screen. Let me stop sharing my screen na lang. Kasi patapos sa pala yun. That's what you meant. No?
Yep.
Good job, Cherry, for the initiative. Para ma-close na rin natin sabay-sabay ang session
Yeah.
ng 9. And you guys again have advanced access to these materials, guys, dun sa Borderless na website, yung I showed yesterday.
Does anyone see my screen already? Yes.
Not yet.
Are you seeing my screen now?
Yep.
Yes. Yes.
Okay.
Yes.
Bakit ako hindi? Okay.
Oh, wait.
Which combined are FICA taxes if the trade or business is a sole
Did we
a
left
partnership
here?
in which
Should I
each
forward
partner is
a
a
little?
parent of the child. So, for example, if a child helps out in their parents' family-owned
No, I think
proprietorship
it's-
business, are not subject to Social Security and partners. However,
I
wages
think
for the
we're finished
services
already.
but generally applies only to sole proprietorships or partnerships where both spouses are partners. It's also generally downward, meaning kids employed by their parents, as opposed to upwards, meaning parents employed by their kids. A statutory employee is an independent contractor who is treated as an employee for employment tax purposes. For example, a driver who distributes beverages is a statutory employee. They report their wages, income, and allowable expenses on Schedule C of Form 1040 and are not liable for self-employment tax because their employers must treat them as employees for Social Security and Medicare tax purposes. Employers must file Form W-2 for wages paid to each employee from whom income, Social Security, or Medicare tax was withheld. Employees provide Form W-4 to their employer to determine the amount from each paycheck to be withheld for federal income taxes. Employers must also then provide W-2s and various 1099 forms to employees and independent contractors by January 31st of the following year. Oh, speaking of 1099s, there are a few different types noted in your Gleim Knowledge Transfer Outline, so please make sure you review those, which are pretty straightforward. And lastly, and maybe most importantly, any business with $10,000 or more in cash transactions from a client must report it on Form 8300. So after an employer withholds taxes based on the employee's directions from the W-4, the funds have to be remitted to the government. Employment taxes include withheld income tax, FICA contributions, and backup withholding on reportable payments. Employers must deposit these taxes based on their deposit schedule, which can be monthly or semi-weekly, depending on the total tax liability reported during a look-back period. So, for example, if an employer's total tax liability is $50,000 or less, they must make monthly deposits. Interestingly, there is a one-day rule where the employer is, being a fairly large employer with $100,000 of employment taxes, it must make a deposit of those taxes by the close of the next business day. Reconciliation reports of the amounts withheld are typically done on a quarterly basis using Form 941. FICA and income tax withheld is different than federal unemployment taxes or FUTA. Those are quarterly, but it is a different schedule and process. All right, that's a wrap on compensation. Thanks for watching.
All right. I think
Mr.
we're just
Aspen,
right on time.
cash basis.
Okay,
We're
Chris.
just right on time. We can continue where we left off yesterday. Thank you, Cherry, for again
Thank you.
taking the initiative. That's what I like about this community, right? We have initiatives. So again, thank you, Cherry, and thank you guys for joining us today. Don't go just yet. We'll end this with a prayer to be led by Maria. But just last note from you guys. I created or I posted my LinkedIn profile in our notes or resources, let's connect. I'll share with you why we're actively pursuing LinkedIn at the moment. Or just be very quick about it. This is to provide you either internship or employment opportunities, right? So if you guys can help us connect to more firms in LinkedIn, the goal that I have in mind is to reach out to as many potential employers in LinkedIn so that I can set up a meeting with them, introduce to them what we do at Borderless Accountants, and they can take a chance on you, either as an intern or someone that they can employ right away. You know what I'm saying? So if you guys are, again, are on LinkedIn, let's connect. And then if you can also actively share our post, I make posts every day. I cross post from our contents in Facebook to the LinkedIn. If you can show your, if you can react or if you can share that, again, the more that we become visible in the LinkedIn network where there are a lot of tax firm owners, the better opportunities there are for everyone, right? I think that it's gonna matter if I reach out to them, we talk, things through, and then I introduce them to you. Yeah, there's, I think, a better opportunity than you directly reaching out to a firm owner. It might be difficult that way, although it doesn't prevent you from doing so. But again, there is an advantage if we get to connect with these people. Makes sense to you guys? So if you want to know the link to that LinkedIn profile that I have just activated for the past few weeks, then head on to our shared file. All right. So with that said, I guess that's it for today. Maria, if you can close today's session with the prayer. Thank you also very much for today. Enjoy the rest of your night.
Yes, Grace. Okay, let us pray. Loving and gracious God, thank you for the gift of this time together, for the learning shared, the thoughts exchanged, and the growth that took place, even in small things. As we leave this space, may the knowledge we've gained take root and continue to grow within us. Help us carry today's insights into our work, our relationships, and our daily lives. Bless each person here with peace, rest, and renewed energy for the days ahead. And may we return with the same spirit of curiosity and connection. Keep us safe, open-hearted, and grounded for tomorrow's new learning. In Jesus' name we pray. Amen.
Amen. Thank you, guys. See you guys again
Thank
tomorrow.
you, Chris.
Prepare for the quiz.
And the group.
Thank you.
Thank you.
Guys.
Thank you, Chris. Good day.
Bye.
Thank
Good night.
you.
Thank you, Chris.
Thank you,
Thank you
Chris.
so
Recording
much.
stopped.
Thank you.
Thank you.